Good morning, traders, and welcome to BCR's morning market outlook. First up, let's talk about the US dollar. The DXY remains under pressure as progress in US-Iran negotiations improves overall market sentiment. Although traders are still waiting for confirmation on the reopening of the Strait of Hormuz. Despite some weakness, the dollar continues to hold near recent highs as inflation concerns linked to elevated energy prices keep expectations for a tighter monetary policy in focus. Technically, the dollar index remains capped below 99.52 and the key 100 psychological level, while support sits at 98.64 and 98.26. Recent price action suggests that the market may be entering a broader recovery phase if inflation pressures remain elevated. Next up, let's have a look at crude oil. WTI has extended losses, falling around 5% and trading near the $90 level as markets move closer to a potential US Iran agreement. Reports suggest that the proposed deal could reopen the Strait of Hormuz and ease supply disruptions. Although President Trump stated that the blockade will remain until a formal agreement is reached, from a technical perspective, oil has entered a clear corrective phase after a previously strong weeks of gains. Momentum indicators have weakened significantly, with MACD showing signs of a bearish crossover and RSI retreating sharply from overbought levels. Key support is seen between 87 to about $85, while resistance is now located around 95 to about the $98 region. Next up, let's have a look at gold. Gold has rebounded towards 45.70 after recovering from last week's losses as easing inflation fears supported sentiment. The metal remains heavily pressured overall, still down roughly about 13% since the beginning of the Middle East conflict as markets continued pricing in higher for longer interest rates. Technically, gold remains in a weak consolidation structure. Prices are trading below the mid Bollinger Band around 46.04, while momentum indicators remain soft with MACD still in negative territory. Resistance is seen around 46.08 and 46.57, while major support remains near the psychological level of $4,500. Lastly, let's have a look at the local currency, the Australian dollar, which is trading around 71.70 as improving global risk sentiment lifted demand for risk-sensitive currencies following progress in the US-Iran negotiations. Gains remain limited after Australia's unemployment rate unexpectedly rose to about 4.5%, reducing expectations for further RBA tightening. Technically, the Australian dollar is holding above key Fibonacci support levels with RSI slightly positive near 53. Immediate resistance is located around 72 cents, followed by 72.70, while downside support remains near 71.24 and the psychological level of 71 cents.